Ondas Holdings, which provides mission-critical private wireless networks and autonomous drone solutions for industrial and government clients, just reported earnings. Revenue is exploding. The company is growing fast, but the stock did not break out. It's down 10% to $7.95 at the moment. In fact, the market did not like it. So what's going on? Because this is where things get really interesting. ONDS is growing fast, but it just provided the biggest risk in all of the story. So let's break down what actually happened. Earnings breakdown. First, the revenue came in strong at $375 million. And massive 605% annual growth, and backlog continues to build, which is great. So on the surface, this looks like a company scaling fast, but earnings per share came in at around minus 40 cents, as you can see there. Way worse than expected. And the widening net losses and fiscal strain, despite record revenue, the company reported steep Q4 net loss of approximately $100 million compared to $10 million the previous year. Operational inefficiencies remain a concern, with a negative net margin of roughly 270% and ongoing pressure from high operating expenses related to rapid expansion. So while the top line is strong, the bottom line is getting worse. This is not a normal miss. This is a company spending aggressively before the revenue fully catches up. And this is exactly why the stock didn't break out. The market is saying, we see the growth, but we don't trust it yet. So they're still losing money, still providing the model, and they're still dependent on future contracts. Strong line. So right now, ONDS is still a story, and the market doesn't fully reward stories. It rewards execution. So what changes that? One contract, 60-minute states here.
The Pentagon service overpays for almost everything. For radar and missiles, helicopters, planes, submarines, down to the nuts and bolts.
One contract, one real defense contract changes everything. It provides the technology, works in the real world. It tells investors this is a real defense company. It gives capital with the institutional money starts paying attention. And this is when companies move from speculation to investment. So we've already seen this exact pattern play out. We've seen it with Anduril. Massive defense contracts, AI-driven warfare systems. It took over major programs like IVAS program. Anduril is becoming the platform, as well as Kraken Robotics. Companies like Kraken show what happens next. Specialized tech, niche positioning, and part of the ecosystem of Anduril. So they don't need to dominate, they just need to plug into the system. So when the platform grows, the ecosystem grows with it. Now imagine this scenario. ONDS gets a US defense contract. A NATO partnership, integration into larger systems. And what happens? Revenue accelerates, backlog explodes, Narrative flips instantly. ONDS doesn't need to win everything, it just needs one meaningful win. Because right now the growth is there, but the proof is missing. So now let's be real. If there's no contract, then it doesn't work without the execution. If you don't get a contract with continued losses, dilution risk, and the stock drifts, then it doesn't work without execution. And the recent earnings just reinforce that risk. And they're spending heavily, but they haven't proven it yet. It's a great story without contracts stays a story. So here's the final takeaway. ONDS high growth, ONDS equals high risk, ONDS equals one catalyst away. The market isn't asking if ONDS can grow. It's asking, can they prove it? And that answer might come down to one contract. So I want to hear from you. After this earnings report, do you still believe in the ONDS story? Hit yes or no in the comments below. And if you want more breakdowns like this before the market catches on, hit subscribe. And appreciate y'all listening to the video, and see y'all in the next video.